Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Listen to me closely, because what we are seeing right now is the exact moment where the average trader gets shaken out and the institutional money steps in. The market is in a state of total panic. You look at the charts, you see Bitcoin dipping under 90,000, dragging everything down with it, and the natural human reaction is to run. It is to protect what you have left. But while the crowd is running for the exits, the data is screaming something entirely different. We are looking at a specific on-chain signal for XRP, something called the MVRV, that historically has separated the smart money from the retail panic. Sentiment just flagged this, and honestly, if you're not paying attention to this specific metric, you are flying blind. And here's the kicker. If the fundamentals of liquidity and infrastructure play out the way the experts are modeling, the price targets we're going to talk about today, $10, $20, even the theoretical $50, aren't just random numbers thrown at a dartboard. They are based on math, liquidity, and utility. So let's bisect this, because we need to break down exactly why this dip might be the biggest blessing in disguise you will see this cycle. Let's set the stage properly. Bitcoin took a hit this morning. When the king sneezes, the market catches a cold. That is just how crypto works. We saw XRP correct about 3.6 in a day, down roughly 13% on the week. If you're staring at the 1-hour chart or the 1-day chart, it looks ugly. It feels uncomfortable. But I need you to zoom out. I need to look at what's happening underneath the hood. Sentiment, which is one of the top market intelligence platforms in the world, just released a report that is absolutely fascinating. They noted that wallets buying XRP in the last 30 days are down about 10.2%. Now, on the surface, that sounds bad, right? Nobody wants to be down 10%. But here is the twist that separates the winners from the losers in this space. In the world of institutional investing, maximum pain for short-term holders often equals maximum opportunity for long-term accumulators. They're calling this a potential buy zone. Why? Because the crowd is underwater, and history suggests that when the average trader is feeling pain, when the average portfolio is in the red, the market is often preparing to pivot. Let's get technical for a second, but I promise I'll keep it simple so you can explain this to your friends. We are talking about the MVRV ratio. That stands for market value to realized value. Think of this like a thermometer for a trader sentiment. When this indicator is high, it means everyone is in profit. When everyone is in profit, they are tempted to sell, to buy a new car or pay off a house. That creates sell pressure. But when the MVRV is low, like it is right now, it means the average holder is at a loss. They're feeling the heat. Sentiment data shows that the lower the MVRV goes, the higher the statistical probability of a rapid rebound. This is purely about market psychology and math. If everyone who wanted to sell has already sold, who is left? Only the holders. And when buyers step back in, the price moves up fast because there is zero resistance. While other assets like Ethereum and Cardano are sitting in what analysts are calling extreme buy zones because they have dropped even harder, XRP is showing incredible resilience, holding above the $2 mark. It is holding its ground better than most. The data suggests the selling pressure might be nearing exhaustion. This isn't me saying it. This is the blockchain data telling us who is moving money and who is holding still. Now, I want to shift gears for a second. I want to talk to you about the big numbers, because you click on videos and you see $50 XRP in the title, and you think, okay, is that just hype? Is that just clickbait? We need to have a serious conversation about infrastructure. We're not talking about meme coin here. We're not talking about a token that exists just to exist. We're talking about an asset designed to settle liquidity for financial institutions. To get to $10, XRP doesn't need a miracle. It needs utility. If XRP captures even a small fraction of the cross-border payment volume currently handled by outdated systems like SWIFT, the demand for the token as a bridge currency rises exponentially. I want you to think of this analogy and use this analogy. Think of XRP like oil in an engine. If the engine is small, you don't need much oil. But if you're powering the entire global banking system, liquidity, you need a massive amount of oil. But here's the thing about XRP. It acts as a bridge. If you want to move $1 billion from the US to Japan in seconds, you need a bridge that can handle the weight. You cannot move $1 billion of value through a token that is priced at 50 cents. The liquidity isn't there. The slippage would be too high. Some macroeconomists, analysts argue that for XRP to settle trillions of dollars in daily volume, the price cannot stay at $2. It mathematically has to be higher to account for the liquidity. That is where the $20 and $50 models come from. It's not about speculation. It's about the necessary price per unit to handle the velocity of money moving across borders. Basically, if XRP is going to be the global standard, the price has to scale with the volume of money it carries. It is a function of supply and demand and on a utility level, not just people buying it on an exchange because they like the logo. This is why analysts are calling this $2 range a blessing. Income Shark mentioned that if you missed the sub $2 opportunities in the past, you might be looking back at this moment in a few years wondering why you even hesitated. The infrastructure is being built. The partnerships are there. The regulatory clarity in the U.S. is established. The liquidity is deepening. When you combine a panic dip in the broader market with strong fundamentals on a specific asset, that is often where the asymmetry lies. That is where the opportunity hides. First, you need to watch the MVRV. Keep an eye on that sentiment data. If it dips lower, historically, trends suggest the bounce could be sharper. This is your dashboard. Second, you have to understand your horizon. Are you trading for a 10% gain next week so you can buy dinner? Or are you looking at the 5-year infrastructure play? The $50 theory is a long-term liquidity play. It's not a get-rich-quick scheme for next Tuesday. Third, do your own research on utility. Don't just buy a ticker symbol. Research the XRPL ledger. Understand how ODL or on-demand liquidity works. When you understand the tech, the price volatility bothers you less. You stop looking at the 1-hour candles and you start looking at the yearly adoption charts. The market rewards patience and it rewards research. While everyone else is panicking over a 3% drop or a bad morning for Bitcoin, the data suggests the fundamentals for XRP are stronger than ever. We might be witnessing the calm before the liquidity storm. Make sure you are paying attention. Do not let the noise of the crowd distract you from the signal on the chart. If you found value in this breakdown, if this helped you see a market a little differently today, do me a favor, smash that like button, subscribe to the channel, and ring the bell. Turn on notifications. We are tracking these indicators every single day, and I don't want you to miss the next update when this metric shifts again. Always remember, this content is for informational entertainment purposes only and should be not taken as financial advice. Always do your own research and consult a licensed financial advisor before making investment decisions. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves they'll never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes. Smash that like button, ring the bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic.